You're an attorney or you run a consulting practice, and somehow your contractor friend who nets less than you writes a smaller check to the IRS every year. That's not a fluke. It's the tax code doing exactly what it was built to do. Quick note before we get into it. I'm an AI avatar of Askia Roberts, a licensed CPA. Every word here was written and approved by the real me. Today I'm breaking down why attorneys, consultants, and other professional service owners get shut out of one of the biggest deductions in the tax code, how that mechanism actually works, what it typically costs in real dollars, and where the exceptions live, because there are some. Here's the myth almost every professional believes. Form an LLC or elect S-corp status, and you get the same tax playbook as any other small business owner. That's not how it works. The tax code splits businesses into two buckets. One bucket, contractors, retailers, manufacturers, e-commerce, gets full access to a major deduction no matter how much they earn. The other bucket is labeled specified service trade or business, and it includes law, consulting, accounting, financial services, and a handful of other professions where the business basically is you, your judgment, your reputation, your advice. Two owners can report identical profit on paper. One keeps a deduction worth real money. The other watches it shrink or vanish as income climbs. Same paperwork, same structure, very different outcome. Here's the mechanism. The 2017 tax law created something called the qualified business income deduction, up to 20% off your business profit before you calculate tax. For most small businesses, that deduction just applies, full stop. But if you're an SSTB, law, consulting, accounting, financial services, and similar, the deduction phases out once your taxable income clears a threshold that adjusts every year, and it's typically fully gone somewhere in the range of $50,000 to $100,000 above where that phase out begins. Below the threshold, it doesn't matter what you do for a living. Everyone gets the full deduction. Above it, the label on your business starts costing you money that a contractor or product-based business earning identical profit never loses. It's not a loophole closing. It was written into the law this way from day one. Let's make it concrete with a composite example. Not a real client, just illustrative math. Picture two business owners, each netting around $500,000 a year. One runs an electrical contracting company, the other runs a solo consulting practice. Same profit, same filing status. Because the contractor isn't an SSTB, they keep the full QBI deduction. Because the consultant hers is phased out almost entirely at that income level. In cases like this, we typically see the gap land somewhere between $8,000 and $25,000 in additional tax per year for the professional services owner. Sometimes more, sometimes less, depending on income, deductions, and entity structure. That range is illustrative only. It is not a promise about what your business would see. Your actual number depends entirely on your specific numbers. Now, the caveat, because this doesn't hit everyone the same way, if your taxable income sits below the phase-out threshold, none of this applies. You get the full deduction regardless of what kind of professional service business you run. And the SSTB label is narrower than people assume. Engineers and architects, for example, are specifically carved out of this rule, even though they're consultants in every practical sense. There are also other levers. S-corp elections that reduce self-employment tax, retirement plan contributions that can pull your taxable income back under the threshold, timing of income and expenses. None of that reverses the QBI phase out by itself, and none of it is automatic. This is not a reason to panic, and it's not something to fix based on a YouTube video. It's a reason to run your actual numbers before year end. How this plays out depends on what you run. A healthcare practice, a trades or contracting business, and a professional services firm each hit this differently. Different thresholds, different fixes, different timing. The link in the description goes to the right one for you. Just tell us what you run. What? Remember that attorney comparing her tax bill to a friend's, wondering what she'd missed? She hadn't missed anything. She just didn't know the rule existed. Once she saw the mechanism, and where she actually sat relative to the threshold, The numbers stopped feeling like a mystery and started feeling like something she could plan around. You may not be able to undo the SSTB label, but you can know exactly where you stand and what options are on the table. You need about 15 minutes and the right numbers for your specific business. That's what's waiting behind the link below.